Hello and good morning to everyone, and thank you for joining us on this Saturday morning. And welcome to this educational presentation of 4 simple steps to consistency. Now, if you're familiar with the webinars and my teaching and my different courses, we really stress consistency in our trading. And it's not about hitting home runs. It's not about having some fly-by-night method that's supposed to promise you riches in the next 6 months, because we know those don't work. It's more about consistency, because consistency will sustain you. And consistency will have you trading not just a couple of months with some good trades and then giving it all back, but more likely years to come, so that you can be trading for years and have a really nice trading legacy, so that you can pass it on and use this education. Now, consistency is rooted in simplicity. It's not something that you have to go searching for some holy grail that's so complicated and some indicator or something that no one's ever heard of. It's actually rooted in the simplest of methods. Unfortunately, we've all been taught, and we all feel like the more complicated or the more profound some method or system or indicator is, well, that's going to guarantee us that we'll be much more successful with our trading. But if there's one thing I've learned in my over 4 decades of trading, it's actually the opposite. Now, let me share with you an example of the way I used to trade, and I'm pretty sure the way most traders trade today if they're having inconsistent results. For example, let's look at this chart in ATGE. All right, this is the way I used to trade when I first started trading, once again, some 4 decades ago, way before we've heard of the systems or methods that you're currently using. For example, I'd see this market and say, well, obviously it's in an uptrend, and I took that class on the institutions, and I'm following what all the institutions are doing. So they're never wrong. So if they're bullish, I've got to be bullish, right? So I want to be a buyer here, but I need a little bit more verification. So I see that we've also created some type of a technical formation, which is called a bullish flag. This is a consolidation pattern where you're just resting before you decide to break out and go even higher. So this is a very good sign as well. And then lastly, I studied candlesticks. So what do we have here? Well, we have a bullish engulfing pattern. That's one of the most bullish patterns you can find in candlesticks. It's just telling you that it's getting ready for another bull run up. So after all this analysis, after all this traditional wisdom that's supposed to really work well, from engulfing patterns to the institutions to technical analysis to volume to what some trading guru was saying, I decide, well, okay, this must be a buy. So I would buy right here in anticipation of the market going straight up, because everything, is that I was taught is supposed to work really well, right? And then this would happen, okay? I'm sure many of you probably have gone through things exactly like this. Well, I was doing this 4 decades ago. Well, I'd say to myself, well, okay, well, I guess the stuff didn't work this time. No, all 3 things didn't work. And since we've broken the support and now we're making new lows, it's verified that we're in a clear-cut downtrend. So I would exit with a loss, and then I'd say, well, listen, if it's going to go down, it's probably going to go down lower. I'll try to make my money back. So if we're in a downtrend, I'm going to be selling, because obviously we broke that Fibonacci level support, and the institutions are probably selling now. So I want to get out. So I'd sell, and now I'd take a short position, and then this would happen, okay? Does this look familiar to anyone? This is the way, in my opinion, I would say 99.9% of all traders trade. They're a day late and a dollar short because you're following things that have no consistency. The steps you're following are rooted in traditional wisdom, but traditional wisdom really doesn't work. I found that out, and that's one of the reasons why I want to teach my students around the world the things that do hold consistency. Now, for example, I'm going to share with you a simple 4-step process, which actually, looking at the same chart, would have bypassed all of this and all this downward movement, and then right here at the very bottom of this sell-off would have actually generated a buy signal where you could have captured upwards of 7 points. So you would have missed all the losses right here and just had one winning trade. And on top of this, you're going to see all the displays that were generated using our platform. This is the PTS Primo Charting platform I developed with Pro Trader Strategies, the educational platform that actually teaches you how to trade with consistency. So this is going to be a great educational presentation today. Thanks for taking time out of your Saturday. Once again, my name is Steven Primo. I am the president and founder of Specialist Trading. If you're new to my webinars, you can see we are all about educating you. We don't promise to have some system that never fails. We don't promise to have some indicator that's going to make you rich in 6 months so you can retire. If you've come to this webinar thinking that that's what I'm going to do and I'm going to tell you what to buy for Monday and what to sell, you've come to the wrong place, because actually that goes entirely against our philosophy. We don't believe in any of that. In fact, we don't have chat rooms. We don't generate signals on a nightly basis to tell our students what to blindly do, because in my opinion, that's the reason why most traders fail. You're blindly following someone or something, and you've taken yourself out of the game. I mean, think of it. How do you make your own trading decisions? Do you go to a chat room, you rely on what they're saying or trading in that room? Do you listen to the economic reports and say, wow, the good figures for the employment numbers, so I guess I should be bullish, right? Or do you listen to some so-called trading guru on TV or even in a webinar? The entire industry is based upon you making your decisions on that judgment. But if the entire industry was based on that, then why is it estimated that 80 to 90% of all traders fail? It's because that really doesn't work. And the reason is you're taking yourself out of the game. Now, most traders say, well, Steve, the reason I do that is because, I don't have enough education. I'm not like you. I didn't study economics in school. I didn't graduate with a business degree. I don't have enough experience. I have another job. I don't have enough time to really research and do this. So I'll just rely on the experts. Well, listen, I don't have a degree in business. I didn't know anything about the stock market until I landed a summer job when I was just out of college. So, there's no reason to know any of that stuff. I stopped listening to news some 4 decades ago when my mentors taught me that it really doesn't matter. So all those things really don't come into play when you're trying to be consistent. What comes into play is being taught sound fundamental things that have stood the test of time. And that's what we do with Specialist Trading and Pro Trader Strategies. We teach you all the things I've accumulated in my over 4 decades actually, of trading, so that you don't have to waste your time and most especially your hard-earned money on things that really don't work in terms of consistency. Now today I'm going to share with you a simple 4-step process that really is one of our most consistent packages today at Specialist Trading. And I'll show you exactly in step-by-step process how to implement this. But before we begin, once again, we are required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this 4-step process, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, once again, please remember that all examples are strictly for educational purposes only. So, as you're taking a moment to view our required disclaimer, if you're new to my webinars and you haven't done so already, we're inviting everyone to follow us on Twitter. There's our handle right there. You may want to copy that down. There's a lot of great free information and education that I post on a daily basis. I post a lot of charts, a lot of information, a lot of signals that our strategies have generated, but simply for education, so you can get a better idea of what we do, as well as I post some financial, bits of financial wisdom along the way. So lots of great free educational information. Feel free to follow us on Twitter. Now, remember, once again, if you've come here today thinking, well, gosh, I want to see what Steve is buying on Monday or what positions Steve has or what to do for my own trading, you've come to the wrong place. This goes entirely against our philosophy. And once again, the reason is because that's what most webinars and most educators, so-called educators, do. And this is a recipe for disaster. This is why 80 to 90% of all traders fail. You have to be in charge of your own trading destiny. I can't trade for you because a good mentor does not trade for you. He teaches you how to trade so that you can make your own trading decisions. And as you see here, my goal is not to trade for you. It's not to force feed you signals. It's not to tell you on a nightly basis what to buy or sell. It's to teach you how to trade. This is the same specialist edge that was taught to me some 43 years ago when I was struggling tremendously on the floor of the stock exchange. I was trading on the floor of the stock exchange and I couldn't make a dime. So I was lucky enough to have some mentors that taught me the same fundamental, consistent techniques, and this is what I do. I'm passing it along to you, to all of our students around the world in over 115 countries and in virtually every state of the United States, okay? So, with that said, now since this is going to be an educational webinar, I want you to ask me as many questions as you can think of, but please wait till the very end. We have a good-sized crowd here today on a Saturday morning, and I don't want to take all of your Saturday answering questions and being here for 2 or 3 hours, the way some webinars used to go. So if you have a question, please wait till the very end of class. It'll probably be in the next half hour or so. I promise I'll get to each and every one of them. The only question I will answer right now is this being recorded? Yes, it is. So if you have to leave early or sometimes you can't hear or see the screen properly, we will send everyone a link to this recording, okay? All right, with that said, we are going to be talking about one of my favorite strategies because it's the most consistent method we have. This is strategy number 4. Okay, this is the first method I was taught by my mentor some 4 decades ago, and I use it every day in some capacity in all of my trading. Now, let me share with you some of the highlights of this particular method. It was originally designed for traders looking to catch momentum. In fact, it still is designed looking to catch momentum. But when I first started trading this 4 decades ago, I would be in and out of a trade maybe in a couple of minutes, maybe 5 minutes tops. But we've designed ways to stay in it for weeks, months, even years if you'd like. All right. It's a pattern recognition strategy. So we're looking for a specific pattern that happens over and over and over again. And the beauty of this is that it just doesn't happen in stocks. You'll see this pattern in currency pairs. You'll see it in Bitcoin. You'll see it in commodities. You'll see it in E-mini futures. And it matters, or I should say it doesn't matter what time frame. You'll see it over and over again in tick charts, in monthly bars, in weekly bars. So this is the pattern we teach you, okay? Now, it only uses one indicator. I'm going to share with you what that is. It's the 50-period moving average. We call that the buy-sell line. And I'll show you why we call that in just a few minutes. But this is how simple you need to trade in order to become consistent. It's really simple. You don't need tons of indicators. I stopped looking at the news, as I said earlier, 4 decades ago. I don't look at economic reports, jobless claims. I just don't look at that stuff. It doesn't matter. Excuse me. If you want to, you can. But as I said, consistency is rooted in simplicity. You don't have to overcomplicate your trading in order to be consistent. It's actually the opposite. You need to strip away those things that you don't really need in order to be consistent. All right, so with that stated, let's begin, and I'll share with you this simple 4-step process. We'll go through it step by step to show you how easy it is to actually apply these levels of consistency to your trading. Now, one thing I have to tell you, since we're talking about how these steps formulate one of our most consistent and I should say popular strategies as well. It's traded by the majority of all of our students around the world. I can't give you all the rules. I can't divulge what this pattern is, but I can give you a few clues as well, and that's what we'll go through in the step-by-step process. It wouldn't be fair to the students of ours around the world who've spent their good-earned money in buying this, and all of a sudden I'm giving away the rules for free. But I will share with you as much as possible, okay? Okay, so here's the process, and you're going to see how simple this is on our platform. We specifically designed the platform to be an educational portal for you. In other words, we realize that as your mentor, I cannot be sitting next to you, even though I'd love to. I cannot be sitting next to everyone in all of our students around the world and teaching you, step by step this process. So we, Pro Trader Strategies and I said we have to develop something that will help students learn so that they can gain this consistency. And while I'm not there all the time, you'll be able to go through this process and learn. And that's why we developed the PTS Primo charting platform. It actually teaches you how to trade with this simple 4-step process. Okay, so let's take it step by step. Step number 1, choose the market you're interested in buying. And we're not saying this facetiously. We really mean choose the market because, as I said earlier, these 4 steps can be applied to any market, any time frame, and any direction. So you have to decide whether you're going to apply this to 5-minute E-mini future charts, the way I do at times. You have to decide, am I going to be trading currency pairs today or whatever, because it makes no difference, all right? And once you've done that, we're going to have a propensity for stock charts today, but trust me, it can be applied to any market. So, whoops, I think I passed a chart here. Let's look at this older chart of NTAP, all right? Now, someone looking at this will say, well, Steve, yeah, this is easy to see that we were going higher. I mean, how simple is that? I mean, we've just gone straight up. But I would have wanted to know somewhere back here that we were going higher. I mean, how would I have known that? Well, this brings us to step number 2. Click on the buy-sell line in the upper green strategy tab. This is why you'll see why we call it the buy-sell line. On our platform, we put it here right specifically at the left-hand portion for you to begin, so you can go down the line here. But this is the most important tool we have, the buy-sell line, because it determines the overall trend and whether you should be buying or selling. Now, the buy-sell line, once again, is just the 50-period moving average. This drop-down menu appears once you click that on. And the most basic form of this is the 50-period moving average. But we have 4 different ways in which to view this. Today, we're going to be talking about one of our most popular features, which is the fluid feature. So you click that on, There's a lot of advantages to using this as opposed to simply using a 50-period moving average. And what happens is it colors the screen from blue to reddish orange. Now someone would say, well, what's this for? I don't understand. Well, firstly, what you want to look for is anywhere from 3 to 5 bars on a specific side of this buy-sell line. Either 3 to 5 bars on the top or 3 to 5 bars below that, because this is going to determine whether you should be buying. As you can see here, originally we had the majority of bars below, but once we crossed above 1, 2, 3, 4, 5 bars, this is telling us right here at the lower portion of this rally that you were in the buy zone. So this is telling you that going forward, until you have 3 to 5 closes in the reddish orange color of the chart, you should only be looking at the stock from a buying point of view. You see how simple this is? It doesn't have to be complicated. You don't have to look at the earnings. You don't have to look at the direction of where the company's going. You don't have to listen to some guy in some chat room. Right away, you've made your own decision that I'm only going to be a buyer in NTAP. All right? I'm not going to short this. Even if it has a big run-up, I'm not going to short it. I'm going to look to buy. But this is just telling you whether you should be a buyer or seller. It does not say buy at the market. This is not a strategy. This is just telling you which side of the fence you should be on. Now, conversely, when we were below here, well, this is the sell zone. Now, until price comes all the way back down here and has 3 to 5 closes in the reddish orange, you are only going to be a buyer. That's how simple trading can be. Automatically, you've eliminated half of your choices. You don't have to think about going short. You don't have to think about, well, should I get out now? This is telling you that this should be looked at from a buyer's point of view. Now, once again, this is not a strategy. This is not a system. It's just automatically eliminating the doubt as to whether you should be buying or selling this. Okay? We don't even consider earnings. We don't consider what someone recommended. We're just looking at the chart because the chart is the source of what we're trading. All our answers come from the chart in front of us. So there's no reason to overcomplicate your trading. So now that we know that we're only going to be a buyer, and you look back in hindsight and say, wow, now that it's up here, I would have known well in advance that I should have been adding some structure in the terms of a strategy to this. Let's go on to the next step. The next step is we're only going to trade signals regardless of what strategy, regardless, it could be a method of yours, could be a method of mine, could be someone else's, but only trade signals that have a steep upward sloping buy-sell line. So as we see right here, this is where we had that nice upward slope, okay? Right here, it was kind of going flat to sideways, a little movement up, but at this point, it started to really gear upwards. And someone would say, what does that matter? Well, that's telling you that there's momentum now in this. Even though price has just slowly stair-stepped up, it really hasn't taken off. This is a clue that there is a lot of strength and momentum. And someone could say, well, Steve, don't I have to look at the volume, or don't I have to look and see what the institutions are doing, or don't I have to look to see what the breadth is? Once again, why overcomplicate your trading? All you need to look for is the slope right here. It's right here in front of you. This is where you want to take the signals that are generated from this point to this point. Now, if you have a strategy that doesn't generate any signals, that's too bad. So you have to have a method or some type of structure that will tell you that, okay, this is a buy area, or this is a buy, or something that just generates a buy signal. Because remember, we're simply not going to buy at the market. We need a plan. We need something to be based off of. We don't just jump in blindly with just using discretion and say, well, Steve says it's got an upward slope, so I buy, right? You need some structure. Here's where strategy 4 comes into play, because this is where we want to be buying, somewhere right here. Now, in our course, our online course of all of our students around the world, we teach you what the pattern is to look for. So you want to look right here in this area for that specific pattern. Let's say you've been taking our course and you've been studying all the rules and everything, and you say, okay, I think I've identified that pattern. Here's the way the platform confirms and teaches you how to spot this and make sure that you're confirmed in properly identifying. What you do now is click on strategy number 4 in the upper green strategy tab. This is how you check your work. So you click this on, the drop-down menu appears, and you click on signals. This is how you check your work. Remember, we don't just want to provide you with up and down arrows and say, well, I don't have to really understand what this strategy is based off of. I'll just click on the arrows. No, they're there for educational purposes. Remember, The only way one becomes consistent is by making your own decisions. Even if you click on the signal arrows without understanding why a buy or sell signal has been generated, that's no different from listening to some guy on TV or listening to the earnings or listening to someone in the chat room. You're taking yourself out of the game. These signals and these signal arrows are strictly for educational purposes to confirm that you know how to properly identify. Our goal is ultimately to get you to the point where you don't even have to use them anymore. I can look at a chart and I know exactly where an up and down signal is and has been generated. I don't need the arrows to verify it because I've been doing it for years. I want to get you to that point so that you can just look at a chart and know exactly where a signal has been generated. Now, until you get to that point, we provide you with the educational arrows to confirm. So let's say in that area where the upward slope was, you think you identified some buy signals. Well, you click on the signal arrows and guess what? There was a buy signal right here. You're right. It meets the qualifications and requirements of that pattern. And had you taken that signal, in the next 3 or so weeks, you could have generated a nice 10-point gain, all right? You would have bypassed all the earnings, all of the, Fibonacci, resistance and all of the volume indicator. Why overcomplicate things? The simple 4-step process really can lead you on that road to consistency I know you're searching for. All right, let's look. Oh, I'm sorry. Let me go back here. I'll backtrack one page. As you can see, there was a sell signal. And a lot of students say, well, wait a minute, Steve, you're in the reddish-orange sell zone and a sell signal. So why didn't you take this? This looks like it would have been a loser. You're right. It would have been a loser if you had blindly taken that. But what was the rule? Remember we said we're only going to take buy signals with a nice, strong upward slope. So conversely, you would only take sell signals with a nice, strong downward slope. So which direction is this slope going? It's kind of going sideways to up a little bit, right? So that's why you would not have taken this trade. You would have said, no, that's not a, it's not a high probability setup, so I won't take it. This is how the fluid buy-sell line feature really helps you. It shows you whether there is momentum in the trade going in your direction or not. So you want to see the momentum going in the direction of the signal. If it's a buy signal, you want to see strong upward momentum. If it's a sell signal, you want to see strong downward. This is a very basic way to trade this. Now, there are other more aggressive ways to trade it. In the weeks to follow, I'll give webinars on a much more aggressive way to trade it. But for now, this is the simplest basic pattern to generate this 4-step process. All right, so let's look at selling opportunities, okay? Step 1, we're going to do the same thing. We're going to choose the market that we're interested in selling or shorting, okay? All right, once again, someone looking at DKS would say, Steve, yeah, I mean, it's easy to see I should have been selling this, but I would want to know somewhere up here before this stock gap down that I should be selling. How would I have known that? I mean, there's most likely some news, maybe the earnings or some announcement came out that caused this to go down. How would I know that unless I really studied fundamental? You say not to look at news, but I wouldn't have known that unless I followed the news, right? If I knew there's some bad earnings estimate, why would I go long this? So I don't understand when you say I don't need to follow the news. Well, let's take it step by step. Step number 2 is we want to click on the buy-sell line. We don't need to look at earnings. We don't need to look at fundamental news. We don't need to look at volume because the buy-sell line tells us automatically whether we should be buying or selling. That's all we need to know. So once we do that, we click on the buy-sell line. In the drop-down menu, we click on the fluid feature. And it colors the screen. So why, if price has been all the time in the sell zone, why would I need to know about the earnings, or why would I need to know about the economic reports or the unemployment, or why would I need to know that? Because the stock was already telling me before this large gap down that it wanted to go lower. Remember, our job as traders is simple. It's twofold. There's only 2 real things we have to learn. The first thing is to listen to the chart in front of us, the source. Listen to it and decide which direction it wants to go. Now, the beauty of the buy-sell line is that it tells you that. And once we have determined what it wants to do, then we just simply jump on board. There's no reason to fight it. There's no reason to overanalyze things. There's no reason to try and pick a top or a bottom. All we're doing is acknowledging that the market is simply like a river. And what we want to do is row our boat or get in the inner tube going in the direction of the current. We don't want to try and swim upstream. That's how most traders fail. So we knew in advance, well before this gap down, that we should not be buying this. Unfortunately, This is the way most traders trade. They'll see like, well, okay, we've made 3 different lows here. They're not confirmed with that divergence model that I purchased for $5,000. In fact, this low did not confirm the other low, so I'm going to buy here, and then this happens, right? So you buy more thinking that, well, now it's really oversold, all right, and it really never goes up. In fact, months later, it's going lower. Now, this brings us to the next step. Step 3, only trade the signals that have a steep downward sloping buy-sell line, okay? Since we know we're going to be selling or shorting, either by buying puts or actually shorting the stock, it's up to us. And remember, if we're trading currency pairs, we can sell the currency pair. If we're trading futures, we can sell the future. It makes no difference. So we see here that this entire time we've had a really strong downward slope. So it's safe to say we can take just about any signal we want. And now that we've studied and taken the course, we see that there are a number of sell signals generated based on that pattern. So in order to check our work, we click on the strategy number 4 tab in the upper green strategy tab line here. As you can see, click that on to check our work. Click on signal arrow, and we were right. Look at all the sell signals we could have taken advantage of, okay? And once again, look at this large drop here based off some news or some announcement. How did the market know to generate sell signals prior to that? That's why we say it's really not required in any way to follow news. You can if you want to. It's not our job to tell you how to trade. It's our job to teach you things that have high levels of consistency. But this is why I don't follow news, because many times the market tells you what it wants to do in advance of fundamental announcements. So why would I waste my time? Why overcomplicate things? It's a lot simpler if you just listen to the market. All right, so let's look at some more examples to show you this pattern and process. We'll look at some older charts just for educational purposes, but towards the end of today's class, I'll show you something that happened just last week, okay? All right, here's that example we looked at earlier. Remember, we were originally going long because there were all these traditional signs that tell us to buy, and then all of a sudden the bottom fell out, so we switched and went short. How could this 4-step process have helped us? Well, we thought we were in a downtrend, so we should be selling, right? Because obviously, Steve, well, you say to listen to the market, right? The market's telling me it's going lower. Not really. Once you apply the buy-sell line, it would have told you that it was actually still in an overall uptrend. So how did we know that? Well, once we applied the buy-sell line, look what happened. The majority price was above. Sure, we had 1 close below here, but remember the rule. You need 3 to 5 closes either above or below to tell you what the direction is. So even though you just had 1 close here, even if you had 2 or 3, you need a minimum of 3. It would be better to have 5 to tell you that the trend is changing. You should be looking at the other side. But even if we had had 3 to 5 closes below, look at the slope. The slope is still going up. So this is our clue that momentum is actually to the upside. Even when you had a close below, it was still telling you that the strong, steep slope was telling us there's momentum to the upside. So we simply apply strategy 4, and that's the pattern we're looking for that generated 7 points. A simple 4-step process. Another example here, FDCH. Okay, this older chart here, this is the way I used to trade. This is a perfect example. I'd look at this chart and say, wow, look at this. That's major, major support, okay? Now, when I was trading on the floor, I used to trade with the institutions, and they would give me orders, and I would place in my book, sometimes orders for 1 million shares. And that would create this support. So I would say to myself, wow, these guys must know what they're doing, right? They have all the big money behind them with the bank, so they're creating the support. And they wouldn't want to be a buyer unless they knew that this was going to go higher. So, wow, if they've got major support here, I think I should be a buyer too. And then look what happens. What happened to the support? I stopped following the institutions when my mentors told me, quote, these guys don't know more than someone who's been trading for a week. They have the lowest record of being successful, the institutions. He says, so why would you follow those guys? It's just a myth that you should follow the big money. All right? Just because there's big money does not mean that they're successful. It does not mean they're consistent. Sure, they'll hit a home run here or there every once in a while, but there is no consistency in their trading. And look, it's a perfect example. So how could this 4-step process have helped us? Well, we add the buy-sell line, and we see that the majority of the time, price was below, even when this so-called support was being generated. Now, sure, we had 1, 2, 3, 4, 5, 6, 7 closes above, but look at the slope. The slope was going down. So I would not even want to buy anything if a signal was generated here. Let's see if any signals were generated. Well, actually, all the signals generated were all sells. So had you taken the very first setups here, it's 11 points to the downside, well before this sell-off happened. How about letter G? Okay, once again, well, we're going up, but look at this strong sell-off, Steve. How did we know that it was going to go back up again? You know, there must have been, once again, some announcement. Well, look at the slope. We had the buy-sell line, and even though we have one close below, this one actually closed just a little bit above. That's not enough to tell us to go short. We had strategy 4, and there were a number of buy signals, 2 days before that large move up. Now, once again, looking at HEI, someone could say, well, yeah, easy to see that we should have been a buyer, Steve, but how would we have known well in advance back here that we should have been a buyer? Well, you actually would have known even further back. Look at the buy-sell line. This entire time it's been in the buy zone. See how powerful this tool is? All you need to know is where is price in relation to that, and you can decide whether you should be a buyer or a seller. Now, say it had gone up right here in that chat room. You said, well, this has been going up for the last month or so. It's gone up far too high, and it's done it too soon. You've got to sell it. It's too overbought. You know, all the indicators, all the tools we follow say this is too high. It's most likely going to come back here for support. This is where the institutions have the support. Well, how did that work? It never went any lower. It kept going higher and higher. Trust in the buy-sell line, trust in the slope, and then simply add the signals. Had you taken the very first signals down here, potentially you could have captured up to 55 points if you decided to stay in that long. And remember, it's up to you how long you want to stay in the trade. As I said in the beginning, we've devised ways for you to be in the trade a couple of days. We've devised different exits for you to be in the trade as long as possible. It's entirely up to you. You're in charge. We do not trade for you. In order to become a consistent trader, you have to decide where you want to get out. All right, looking at Tiffany right here, someone could say, well, Steve, how could I in any way trade this? It's going sideways. It's basically in a range. Well, what happened to the sideways range? Okay, it broke down. How could we have known that? Well, there's no way to know with absolute certainty, but there's a way to put the odds in your favor by adding the buy-sell line. The majority of bars are below in the reddish-orange sell zone. Sure, we had some closes here above. Now, someone could say, well, Steve, shouldn't I just buy here? Well, first of all, remember, just because you have 3 to 5 closes above, it does not mean you just buy at the market. This is not a system. It's not a strategy. You still need structure in the form of that pattern to be generated. All right? And even if you generated a buy signal here, you should not take it because look at the slope. The slope is going lower. In order to take a buy signal, that slope has to be headed upwards. So we add, and we see that the buy signal was generated, but we would not have taken it, and we would have waited for the sell signal to be generated, and there's a nice 20 points in a couple of weeks. You see how this buy-sell line and how this process can really help you become consistent. PSA, okay, once again, this is the way I used to trade. I would look at all the things I had been taught. Conventional wisdom says, well, Steve, we are definitely in a downtrend. Look at all these bearish engulfing patterns. 1, 2, 3, 4. If this is not a sign that this stock is going lower, I don't know what is. The market is screaming that it wants to go lower. And on top of that, as we were going higher, we had numerous closes where they closed higher. But then at this point, we started having numerous closes to the downside. A total of 10 bars in the last 12 or so bars that closed lower than the opening. That's the market telling me there's selling pressure there. There's a lot of sellers, so I should be a seller too. Okay? Sounds logical, right? But what's the buy-sell line telling us? Because look what happened. What happened to all the selling pressure? What happened to all the signs that the market was telling you it wanted to go lower? Remember, I preach that you should listen to the market because it tells you what it wants to do. Unfortunately, most traders are listening to the wrong tools to tell them what the market wants to do. They're not based in any consistency. The easiest tool to start applying right now is the 50-period moving average. If you want to see how clearly it's displayed, you just use it in the form of the fluid buy-sell line. And this really gives you a better view of what the market wants to do. Now, sure, all these bearish engulfing patterns would tell you that was a sell-off, but that was a buying opportunity. It wasn't a selling opportunity. It was a buying opportunity because the slope is going straight up and the majority of the bars were above. Sure, we had one close below, not enough to get us to go short and to look to go short. So that was a buying opportunity. And once you added the structure of this pattern, there were 3 chances to get long before 100 point potential gain. Trading is simple when you just get out of the way. KMPR had kind of a downtrend here, but then it had a really nice upward move. We apply the buy-sell line, and we see that we had a number of bars below. And this is where students say, well, Steve, I don't understand. I should be selling here, right? Sure, if a signal was generated to go short in the red zone, you want to sell, but you also want this to have a nice downward slope. And which direction is the slope going? It's going up. So a sell signal was generated, but according to the slope, we should not take that. And as you've often heard me say in the past, sometimes the best trades are the ones you don't take. So this simple process can keep you out of trouble as well. Looking at SHOP, okay, obviously in hindsight, we've been going straight up. That wasn't very hard to tell. You would have known well in advance that you shouldn't sell this, regardless of how overbought it is, regardless of how high it's going. You should only be a buyer once you apply the structure of that pattern. Had you purchased down here towards the bottom, potentially you could have captured 230 points, okay, in a couple of months. Now, here's the way most students trade. They're always a day late and a dollar short. They say, okay, Steve, well, the market's telling me the trend is down. I don't really need to listen to all your four-step process because this is simple. We're in a downtrend. So you decide to get short somewhere around here, and then this happens. And you go, oh, wow, okay, I got stopped out. Well, now it looks like we're going back up, so I'll buy. And then you buy, and then it goes back down. Okay? Look familiar, right? This is the way most traders trade. You're always a day late and a dollar short because you're following, things that have no levels of consistency. The simplest thing you can start doing right now is applying the fluid buy-sell line. Because right there, it was telling you all along, the only way you should be approaching this market is from a seller's point of view. None of the bars closed above the 50-period moving average of the fluid buy-sell line. And you have a strong downward slope. Once you apply the pattern, you see here that you had some nice sell signals. Had you taken this one, potentially you could have captured 22 points. Another example of a straight up market in SHAK, how you could have taken advantage of that was apply the buy-sell line, step number 2. You see that all along the slope has been strong. There is some very strong momentum to the upside. You apply the pattern, and potentially you could have captured 50 points to the upside. TLRY, all right? In hindsight, sure, you shouldn't have bought this. This is the way most traders trade, though. They'll say, well, Steve, there was support here. Look at this double bottom, okay? This is where the institutions and the big banks and bought. Okay, well, it went up for about a week, and then a week later, it's making lower lows, okay? So you buy some more. Sure, it bounces up. You think, I just need it to come up here to break even, and then it's making lower lows. This is why most traders fail. You're trying to pick tops and bottoms, and you're trying to swim upstream. The stream is going down. There's a very strong downward current. For some reason, we're taught to swim against that current. That's silly. Remember, as a trader, in order to become consistent, we just have to follow a two-step process. The first process is listen to the market. What does it want to do? And once we've listened to it, then just jump on board in that direction. That's it. So the market here is telling us it wants to go lower. All right? Sure, we have some closes above, but look at the slope. It's always headed lower, so we're not going to buy. Had you taken any of these sell signals, potentially you could have captured 60 points to the downside. Trading is simple when you listen to the market. Okay, let's recap before we go to the question and answer portion. Remember, step 1, choose your market. And the reason why we say that is because this process can be applied to any market, any time frame, and any direction. So it makes no difference what you trade. I know I showed the majority charts here, virtually all the charts here, on stocks. But that's okay. It can be, if you're an E-mini trader, if you're a currency trader, you can apply that same process to whatever market. If you trade 5-minute charts or if you trade monthly bars, it makes no difference. Step 2, once that you've chosen the market, is click on the buy-sell line on our platform. Now the buy-sell line is the 50-period moving average. Okay? You can start using that right now. You do not need our platform to use that. Remember, the 50-period moving average is the buy-sell line. If price is above, you look at the market with a buyer's point of view. If price is below, you look at the market from a seller's point of view. It does not mean you buy at the market if price is above. It does not mean you sell at the market. It's just telling you what your bias should be. Now, you can start doing that right now, regardless of what platform. But the best way to really view that momentum And to really be able to listen to the market is to have our platform, because you have the fluid feature. That's what we use this process for. The fluid feature colors the back of the screen either blue for the buy zone or reddish orange for the sell zone. It makes it that simple, and you really see the strength of the upward or the downward slope in terms of momentum. This is extremely important in applying this process. Once you do that, you click on strategy 4, because that will verify whether you properly identified a signal, a valid signal to buy or sell. Remember, in our course, we painstakingly teach you how to view and how to identify this pattern. We want you to be able to see it all over the place because it's always happening. But we offer you the strategy number 4, the up and down arrows, to verify your work. In other words, it wouldn't help us if you thought you were properly identifying it and you weren't, and there would be no way to check your work. So you have to click on those arrows until you properly know how to identify a valid signal. Once you do, then you don't need the arrows anymore. I don't even look at those arrows because I know when there's a setup being generated after trading it for the last 4 decades, okay? I want to get you to that point where you can look at any chart. Say you go over a friend's house and look at their charts, or you see something on TV and you can say to yourself, that's a strategy number 4, buy signal. That's a strategy number 4, sell signal, without having to use this. But in the meantime, while you're learning, since I can't be there sitting next to you, we created the PTS Primo charting platform. This is the educational platform that teaches you this 4-step process and gets you on that road to consistency. Remember, strategy number 4 can be applied to virtually any market, any time frame, in any direction. Because of this, because of its ability to be able to transfer into over all these other categories, it is our most consistent strategy to date. So, as we close here, I want to tell you about a great offer for taking time out of your Saturday morning. We're going to give you a great offer to add to your consistency. We're going to give you strategy number 4 along with the platform for a great offer. In fact, we're giving you 3 different ways to become consistent. This is our most consistent strategy, our pattern recognition method. With this offer, you're going to get all the complete strategy number 4 rules. We're going to teach you how to trade it aggressively as well as conservatively. Now we have all the entries, exits, and stops for you to choose from. There are upwards of 7 entries, 7 exits, and 7 stops so that you can be in charge of your own trading destiny. Remember, no 2 traders should ever trade alike. Because of this, 2 traders, maybe 3 traders could see the same setup in a stock or a currency pair, take the same signal, and come up with 3 entirely different results. And that's okay. In fact, we encourage that because we want you to make your own decision. You may be the type of trader that wants to get in and out quickly so that you can take another trade. That's fine. We give you different exits for that. You may be the type of trader that is very conservative and doesn't take a lot of risk. That's great. We teach you different ways to place your stops. You can have the minimal risk if you like. We teach you different ways to enter. There's not just one entry. There's upwards of 6 different entry points. It's up to you. So this is why we say we are an educational company. This is not a systematic company where everyone's going to come up with the same exact results. We don't encourage that. And because of that, we don't have any statistics because we can't have statistics on 1,000,001 ways in which to trade this. All we know is that I've been trading this for 40 years and has a very high level of consistency. Works on all markets and all time frames. Now, there are 3 ways to become a course member. This is the offer we're going to offer you, all of you, today. Option number 1, this includes all 15 of the educational videos with complete entry and exit rules to strategy number 4 course. This is $695. Okay, this is just the basic course that you'll learn on your own. Now, if you want to take it up a notch, option number 2 for $300 more comes with the automatic signal add-ons for your platform. So let's say you use Metastock or TradeStation. We will provide you with that up and down arrows to check your work. But if you really want to take it to the highest level for the same price, I would choose option number 3 and pass on the add-on for your platform and just take the 1 year free of our platform, our own personal platform. Because remember, this is the 4-step process that teaches you how to be consistent. So with this option number 3, you'll get the strategy along with 1 free year of the platform so that you can go through this step-by-step process on your own. It has the fluid buy-sell line, all the automatic buy and sell arrows, and it comes with so much more. Let me tell you what else is included. You'll get, obviously, strategy number 4. You'll get all the enhanced buy-sell line features. You'll also get a tool I developed with Pro Trader Strategies. This is our strength of trend tool that you can apply to any market that has a unique ability to see if the trend is running out of gas or it still has some momentum left in it. You also receive automatically generated exit levels. This is one of our different ways in which to exit. They can automatically be generated on the platform so that in a couple of seconds you can see where you'd want to exit if you decide to use this exit feature. Over 90 of the most prominent technical indicators included with great tech support. But here's what I'm most proud of. It's the signal scanner. Okay, because we realize not everyone can be in front of your computer 24/7. Let's say you work during the day and you want to come home and see what the signals are for the next day in any market or time frame. Okay, well, with the Strategy 4 course, once again, all you have to do is click on our platform, click on Strategy 4, where you were clicking on signal arrows before. Just go to the bottom and click on Scanner. Okay, you'll see this page appear. All right, you click on Load Symbols, and we have a list of all the different markets, European exchanges, the Dow, S&P, NASDAQ, currency pairs, E-mini futures. Click on whatever symbols list you're interested in, and they will magically appear in about 5 seconds, okay? Once you see it appear, it's as simple as clicking on Scan, and the platform automatically knows to scan for Strategy 4 signals. In about less than a minute, you'll see a series of green or red bars. The green bars mean there's a buy signal in the corresponding stock. The red bars mean there's a sell signal. This is how simple this is. So in a matter of about 2 minutes every night, you can see the dozens and dozens of Strategy number 4 setups that are generated for the next day. Now, let's look at an example right here. Here's something that happened last week in KOD, okay? Obviously, the stock was kind of headed sideways to higher, but then all of a sudden it took off, most likely on some big news, okay, just this last week. All right, how could we have taken advantage of that? Well, the first thing we do is add the buy sell line, the fluid feature, which you only get on option number 3 of our package, okay? And this is what I really highly suggest taking this option. Now, we see here that we've had a nice upward slope right around this portion right here. So this is where we want to look for signals. Now, say you're a member of our course. You say to yourself, well, wow, I see a number of setups right here, a real number of high probability setups. So to check your work, you click on Strategy number 4, and look at all the buy signals that were generated, okay? You think you could have taken advantage of this? Now, let's say you became a member of our course last week, okay? You could have used the scanner, and the scanner last week would have identified these 2 buy signals right here, just days before a 45-point gain. Now, we're not saying you would have made 45 points. Most likely, I would have sold well before I made the 45 points, not knowing how high I was going to go. But it's up to you. Potentially, if you wanted to stay in that long enough, you could have made 45 points because the market went up that high in KOD, okay? How did we know? There must have been some announcement or something, because the pattern generated all along here was telling us that this is a buy. And look at the momentum was strong. This just happened last week. And if you used our scanner, you would have scanned and seen that there were 2 buy signals, I believe, on November 26th and 27th, okay? Remember, this is all made for your benefit using our platform. A year from today, trust me, you will have wished you became a member of this course. This is our most consistent course to date, as told through testimonials by all of our students around the world. So it makes no difference what market, what time frame, or what direction you want to trade. Strategy number 4 will really take you to those consistent levels you want to achieve. So take advantage of this great offer. Remember, if you just want to get the complete course, the basic online course, it's $6.95. If you want to get it with the up and down arrows for your own platform, $9.95. But I would suggest going for option 3, which doesn't give you the up and down arrows to add on to your platform, but you get 1 free year of the PTS Primo charting platform, so you can go through this 4-step process. This is a $1,900 value cut in half, nearly 50%, okay? Here's the other great advantage of this. We realize that still some people can't come up with $6.95 or $9.95. We totally understand. Pro Trader Strategies, who handles all of the pricing, all the discounts, will work with you and set up a payment plan. So for a small discount, maybe a couple $100, you can still be up and running. So they can decide for you what the best payment plan is, what the best small deposit is, and you can still be up and running as early as today. So here's how to take advantage of this. I would suggest contacting Pro Trader Strategies. If you want to put together a payment plan, give them a call right now at 310-598-6677. They have qualified trading consultants manning the phones right now. They would be happy to answer any question. There's absolutely no obligation, and they would be happy to construct or at least tell you what would be required to have a payment plan so you can be up and running for a small deposit. Now, that link you see on the very bottom is the informational page that will take you either to sign up or more information on this. It's not a live link, but I have just posted a live link on the chat box in the far right-hand corner of the GoToWebinar column. All you have to do is click that one on, and it will automatically take you to the sign-up page or the information that is on that sign-up page. Honestly, though, in my opinion, I would suggest contacting Pro Trader Strategies. As I said earlier, there's absolutely no obligation. They would be happy to answer any questions concerning pricing or concerning the platform, and they can work with you and they can set something up with you, okay? So that all you have to do is put a small deposit down, and they will be up, and you can be up and running today. All right. Now, if last time I did this presentation, the phones were just tied up for a long time. So don't worry, keep calling, and someone will be there to answer if the line is busy. Okay. And this offer is very limited. So don't, even though I'm going to send you the link to this recording, don't sit on it and say, well, okay, you know what, it's January 1st. I'm going to take advantage of that great offer Steve was talking about. I like that strategy number 4. Well, but I can almost guarantee you that this offer will be going back up to close to 2,000 again. So don't waste your time if you're really seriously interested. Now, I remember I said I would answer your questions. So if you have any questions, go to the question and answer box, type them in, and I will be happy to do so right now. Someone is asking, Steve, can you chart a future of the index ES or SPX with this strategy? Yeah, sure. I mean, I don't have live charts right now, but you can do that right now. So, for example, let's say you wanted to look at the S&P. A simple way is to, if you don't have the capability, look at the spiders. That's the ETF that represents the S&P. You can, if you don't have the PTS Primo charting platform, just click on a 50-period moving average, whatever platform you have, and you can see whether price is above or below, and you can see how long it's been above or below. Okay. And you can start doing that process. The only trouble is with the fluid, you won't have the capability of the fluid that gives you a much greater display of the momentum, and it really won't help you, okay? So it's a basic bare bones way of approach, but you can still do that right now, okay? Bill is asking, Steve, you said to ignore all the news and news events, right? Well, first of all, no, I didn't say, I said I don't look at news events. I said it's not required and there's really no need. But please remember, if you feel you need to look at news, and if you feel that really that you can't cut the umbilical cord, that's fine. We're not going to tell you not to do that. It's just not required. Trust me, when my mentor said that to me some 4 decades ago, I said, are you kidding me? I've been always taught I have to look at the news. I need to know the earnings. After all, I was making markets in roughly about 50 stocks. Didn't I need to know what the basis of the company was based on, the economic earnings of it and everything? But when they told me there was no need to, because of the time frame I was trading, I realized it after some time, and I realized they're right. There's no reason for me to look at that. So once again, if you feel you need to look at that, go ahead, but it is in no way required, okay? Someone is asking, do you trade the 5-minute E-mini charts and still ignore the news and news events? Yes. As I said earlier, I stopped looking at the news 4 decades ago. It's really not required. Many times, it's not guaranteed, but I would say, in my experience, 80% of the times, it's already built into the market, and if a news announcement or some earnings or something comes out, I'm already in sync with that direction that the news came out. So if it was a positive announcement, or people recognize that as something being bullish, the market is already telling me that it's coming from a bullish point of view, and so on. So it all depends what time frame and what market you're trading. But try it out. You can see for yourself right now. You can look right now and apply the 50-period moving average. Now, there are other more sophisticated ways that sometimes are out of sync. And that's okay. Remember, consistency does not mean that every trade is going to be a winner. I still lose on trades. In fact, I had a losing trade the other day. That's okay. The point is, a consistent method will be able to make that back. So that's what you're looking for. If you have 1 or 2 losses, you want a method that's able to recoup that back, usually in the next trade. So that's what we mean by consistency. Consistency does not mean that we never lose. We haven't had a losing trade in 10 years. If anyone ever says that, I would run from that, okay? There's nothing wrong. The best traders I know lose all the time, but they're able and confident to know that they make it back. That's what we're promoting. And all of our methods, most likely strategy number 4 is our most consistent out of all of our methods, okay? excuse me, as we close here, good questions. As we close, I just want to say this is a great, great offer. Please take advantage of this while it's going on. Remember, you do not need to come up with $6.95 or $9.95 to take advantage. You can still come up with a payment plan. Just contact Pro Trader Strategies. They would be happy to work with you. Call them directly at 310-598-6677. As we close, I just want to say thank you so much for attending today. As you take one last look at our disclaimer, I hope you learned something. I hope you got a little bit out of this 4-step process. But most especially, I look forward to all of you becoming students of mine in the Strategy Number 4 course, along with our platform, okay? Have a great day. Have a great weekend, and I'll see you next time. Bye-bye.